All right. Hey, Mitch, we are live, Facebook Live, for our monthly review on what's happening with mortgages and real estate. As we take a look at being the kind of the source of good information, want to have regular conversations here with Mitch, with Pivot Lending Group, because mortgages are a giant portion of what we do every day. I know the stories are all these cash buyers coming in from out of state, and what does that look like? The numbers don't actually show. Most people are still getting a mortgage. Most buyers are not actually coming in with cash. So, as Mitch and I are talking through on a regular basis about what's going on in our industry and what is the mortgage side of it doing. Again, want to convey the information that we're seeing. So, Mitch, for those that don't know you, tell us a little bit about kind of your background and a little bit about Pivot.
You got it. Thanks, Matt. Good to be here again. I can't believe a month has already gone by. It just goes so quickly in our industry. Pivot Lending Group is a true local lender. We're based out of Littleton, Colorado. We're considered what's called a direct lender, which is also called bank, as opposed to a mortgage broker. And so, as a mortgage banker, we are able to provide the financing for the loan transaction from start to finish. We're never turning over the loan package to another company to be reviewed for underwriting and approval and closing and funding. We are the one-stop shop, for lack of a better word or words, to accommodate our clients' needs for their mortgage financing. So it works really well as far as communication, offering a lot of different programs that are available in the marketplace, and being extremely competitive. 15 investors that were able to actually, quote unquote, shop the interest rate around for our clients. And so the combination of all that's worked very well for the last many years for me. And Pivot's been around about 20 years, always in Littleton, Colorado. So they've got a good thing going, and very happy to be with them and happy to continue to work with you.
Yeah, likewise, right? And Mitch is primarily, one of our always go-to resources when it comes to buyers looking to obtain a mortgage. And part of the reason for that is Mitch gets things done, and he's a source of great information. Also a source of great information when I've got questions for my sellers around something that might be going on the listing side of it. So today we want to talk through appraisals, just the common questions we get that come up on appraisals and the nuance that is that piece of it. Now, before we dive in, Mitch, we're coming up on Halloween, and your kids are a little bit older. I'm guessing they're no longer trick-or-treating.
Yes, well, so they tell me.
They might still be going door to door with their ghost costume.
They might still be without me knowing. That's right.
So did you implement a dad tax and pick out your favorite candy when they came home as little ones?
Always. Oh yeah. And it was Kit Kats. I knew exactly what it was.
Got to take the Kit Kats.
If the white chocolate ones came, those were very, very much a novelty at that time when they were young. They would never know what hit them.
That's funny. So, in asking that question, right? Because as my kid's getting to that point, he's not quite going on his own yet. He's still a little young for that, but it just, going to teach him about the dad tax and make sure we get the good candy.
Without a doubt. And there'll be plenty of it for sure.
Yeah.
Excellent. Good. Well, enjoy those times. Those days are great.
It'll be great. So let's talk through appraisals, Mitch. Now, an appraisal is an independent third party, right? They're not in the transaction. They don't have any skin in the game, so to speak, as to where the value comes in at. They're going to evaluate what the market's doing and say, this is what the home is worth. So that impacts whether you're refinancing or purchasing a home. And that's just kind of a brief overview. Now, there's a lot of things that it takes to become an appraiser. Thankfully, I've got a great resource with my father-in-law who is an appraiser. But let's talk about it from the mortgage side of it, Mitch. What are some of the questions that you get frequently about appraisals?
Sure, it's a good question. And appraisals, really, when someone asks me, what is the benefit of an appraisal to the lender? And the appraisal is the eyes of the lender. We never ever physically go and walk or see a property. And so we're relying on the appraiser to do just that. And that's why they measure the property. That's why they look for any defects, should there be any, or any concerns about things they see as defects that they may not be an expert in, but they'll call out for certain things to be warranted or reviewed. For example, if a roof doesn't look like it's in good shape, they'll call for a roof certification within the appraisal. So they are the eyes of the lending company, which is very important because that's the collateral. That's what the loan is being based on. Should the new home buyer run into some financial problems or decide not to make payments, take that property back, and they want to make sure they're getting the property that they saw the appraisal on and made a loan on. And should they ever have to do that, they don't want the property to be in poor condition. They want it to be in resaleable condition right away.
Yeah.
And so that's the big picture as to why that appraisal is so important to start with. The second part is they don't want to overloan on a property. So if the property is selling for $450,000 and it appraises for $425,000, we want to know that we're not loaning on to $450,000. And again, should the property get injured, now we're having to try, well, not us, but Fannie Mae would be trying to sell a home that's worth less value than they initially did a loan for 6 months prior, and that would be a problem. So it protects the lender ultimately, but the buyer then benefits in knowing the value of their home. And sometimes they're buying into equity. If that value of the home is worth more than they're paying on their purchase price, which we're seeing some, then they feel much better about that purchase. And it's nice to walk in that way.
Yeah, in fact, we just helped a buyer, walk into quite a bit of equity. They're walking into, I think the final number was like $27,000 in equity. So it's happening in this market.
Right.
It's not as frequent. It's definitely more the rare, but it is happening. So now, what if I'm a buyer? I'm a home buyer. What's the benefit to me as a home buyer for getting an appraisal?
Well, two parts to that. One is so they get a good understanding of what the market value is of the home that they want to purchase. It also helps decipher what the contract is versus what the appraisal is. So if they decided to buy the home for $450,000 and the property appraised for $475,000, then of course they have that extra equity in the home that they didn't know they were going to have. So it's a feel-good appraisal at that point. However, if the appraisal should come in a little bit lower, then if there's some contractual items that say, even if the appraisal should come in lower, you, the buyer, have agreed to buy the home anyway, and maybe with some limits around that, at least you know what you're buying at and why you are paying extra dollars for the property piece value, but at least you know what that value is. So it's really important in that respect. And then the second is back to my initial comment is the lender has to know what that value is, otherwise they can't make a loan yet. And so if the value is good for the lender, then it should give the buyer some comfort in knowing that it's a good value given from that the appraisal submitted that valuation. There are always some challenges if the appraisal comes in low. Sometimes we try to do a recertification of value, is what it's called a little bit.
Yeah, so sorry, I missed that part, but I caught the recertification of value.
Okay. So if the value of the appraisal comes in lower, and if the appraiser missed some other comparable homes that were available to establish the actual value of the home based on the contract, all of us join forces to pull those together and resubmit them. And that's called recertifying the valuation of the home to see if the appraiser maybe didn't catch all the comparables that really were comparables, and maybe they used something that wasn't a.
Yeah, and my father-in-law and I did an interview about the values if they don't come in low, how best to kind of navigate through that. An interesting dynamic when we go to the appraiser and say, hey, we think the value's different. Review your work and tell me if you agree that your first report was maybe less than accurate. Little interesting dynamic there.
Yeah, for sure. And so, not that we have to be careful of hurting their feelings or anything like that, because that's not what they care about truly. What they want to make sure is that they're providing a good, valid, say, secure appraised value. And oftentimes, if we truly have some good comparables to bring in, we are finding the appraisers we do business with are are open to, oh my goodness, I missed that one, or maybe an adjustment I had in here. I actually, here's what I have found, that they have forgotten to change it from a previous appraisal, but it's stuck in this appraisal, and it actually changed the value of our property.
Yeah.
So human error is there, and most of them are open to that if it all makes sense.
Yeah. Yeah, of course. So now I know we don't always have to have an appraisal. A lot of times cash transactions don't have to have an appraisal. But do
Mhm.
we have to have an appraisal anytime there's a loan? Conventional FHA, is it going to be required every single time?
Yeah, that's a really good question, because the answer, what most people would say, however, if we're doing a government loan, so if it's going to be FHA, Federal Housing Administration, or the Veterans Administration, VA loans, we always 100% always have to complete an appraisal for those types of loans. But if a buyer is purchasing or refinancing and using a conventional loan, which many people have heard of Fannie Mae as a conventional loan, but there's two. There's Fannie Mae and Freddie Mac. Both are entities owned by the government to help buy mortgages from lenders after they close. They had a very large database after the real estate bubble in 2010. And all appraisers must provide all the information about the appraisals they've completed when they complete them. And Fannie Mae now has this massive database of values in all over the country, of which, when we run a loan approval for a client, if that property address is found, and if the value is supported based on the data that is in Fannie Mae or Freddie Mac's database, and the client is putting 20% down for a down payment or more, then we can get a response. And appraisal is not required on this transaction because we have enough data to support the purchase price. So they're called PIWs, Paul, Indigo, Wilma. It's property inspection waiver. That would be my the Flintstones reference.
Yeah.
So we get those probably on the ones that fit the 20% down criteria for purchases. We probably get the waivers about 40 to 50% of the time, maybe even 60% in some cases. So it's quite frequent that we get that result.
Yeah.
Most times on refinances, we get them about 90% of the time.
And I'm seeing it happen a little bit more frequently now than maybe a few years ago. And I don't know if that's just my experience anecdotally, or that statistics are kind of backing that up. But right now in this competitive Denver market, we're seeing the probably the largest drive for sellers in taking an offer is that guarantee of cash above the appraisal. So, right, to use your numbers, if we're under contract at 450, the appraisal comes in at 425, the seller doesn't want to negotiate again, but they just want to be done. So the buyer guaranteeing that extra $25,000 is making it. So from a buyer's perspective, if you're putting 20% down, it very much can be worth the conversation with Mitch or your lender to say, hey, does this property we're about to write on, does this qualify? Can we get an appraisal waiver? And knowing what I know, is that something I feel comfortable moving forward with? Because you can get the request for appraisal waiver and still have an appraisal, still do that. You just may not be required to, but that could absolutely impact your likelihood to get a loan, right? If the seller doesn't have to worry about negotiating again, maybe that tips the scales to your favor, right?
Right. Well, it puts you in a better position for negotiating, and they may decide to accept that offer over another offer that have guidelines or requirements that are less favorable to the seller, for sure. Yeah.
So the follow-up question, right, is that something that costs money? Do I have to pay for that that appraisal waiver? Or is there some sort of trade-off there? I didn't have to get it, but I still had to pay something for it.
Got it. It's a good question. So in the last several years that they've introduced this, it only started about 2.5 years ago. There's never been a charge associated with the appraisal waiver. So at this point, no cost whatsoever. So one of the other added benefits to a buyer is that they save on the cost of the appraisal, which could range anywhere from $600 to $1,200, depending on if it's a fourplex or just a single family residence. And it helps expedite the contract period that you could actually close quicker when you're not waiting 10, 12 days for the appraisal to be returned.
Yeah.
So it's a win-win, like 3 different wins in there between time saving, cost saving, and better negotiations when it comes to making.
Yeah. So if we can increase the likelihood you get the contract, you might be in a much better position. So definitely it's worth the conversation, worth the discussion to have without a doubt. So now so what happens right now with an appraisal? Now is we dive into the answer to this question. Want to go back, say 15 years ago. So we're going to go back to 2006. What was that like, Mitch, as you were doing mortgage lending? What happened when you ordered the appraisal? And not maybe you specifically, because there may have been some
I understand.
other things going on in the world as far as corruption or bullying, if you want to call it that. But what just kind of happened in 2006?
I would call it that. We'll leave it there. We'll leave it at the C word. So what was happening was, number one, lenders went directly to the appraisers to order the appraisal to start with. So we, in a favorable way, were able to create relationships with the appraisers who we could count on to go and do the appraisal in a timely manner, not charge too much money. If they had any questions, we would have a dialogue around that. So we all understood how the appraisal was going to come back before it came back. And it was just a very nice, kind, great relationship building and open dialogue. Unfortunately, many entities took advantage of that and said things like, if you bring this value in, I'll give you an extra bump in a bonus on this appraisal. Or the other side, I will never work with you again going forward. So your business will be impacted. So those types of examples caused a very, very challenging marketplace. And that was the values of properties were being appraised for more maybe than what they were worth. Lenders were overloaning because they were using, again, the appraiser's eyes, which is the appraisal, to establish in the market value, to establish that home. And then the people couldn't afford to make the payments anymore because of the type of loans that were being done. And all of a sudden, everybody was upside down, more money was owed than. So one of the items that they dissected said, this appraisal relationship must be severed between the lender and the appraiser. We're now going to introduce a new entity called an appraisal management company. And so they've become the liaison between lenders and appraisers, and they are the voice of both of those sides of the equation. So the management company talks to the appraiser and tells us information, and we talk to the appraisal management company who tells the appraiser information. So we never can actually constantly. That is something that they said is no longer an appropriate conversation to have. So with that said, it added a little bit of extra time and it added a little bit of extra money for those appraisals, because now this middle company is getting paid for their services, which they provide, but they weren't there before. And so that was one of the results of the bubble period, was this new change in how we handle appraisals.
Yeah, and I think maybe inappropriately, appraisers took the brunt of the blame, for the housing correction, the housing collapse, the bubble, whatever you want to call it. And what we've created now is maybe a bit more authentic appraisals, right? Because you don't have that relationship where the appraiser could get bullied into, making a value about, hey, this should be worth next year this much, so we're just going to say it's worth that much this year, and really kind of creating that landscape. So today, right, you reach out to the appraisal management company, they hire the appraiser, and we keep that more than arm's length transaction to make sure we get more accurate appraisals.
Correct. And to your point in the very beginning comment around this particular subject of it, each appraiser is independent. So none of them are employed by the appraisal management companies, nor any lending firm.
Yeah.
Now, the appraisal management company does have appraisers on staff because they have to review appraisals when we go back in and either say the appraiser completed an appraisal that maybe was not fully accurate, or the appraiser goes to the appraisal management company with questions as well to say, how would you guys interpret this? I'm not fully sure how I want to finalize the numbers with this. Can I get your opinion? So they do work together, but they are appraisers on the staff of the appraisal management company for that kind of communication.
Yeah, for sure. So, kind of a better dynamic, better relationship is, we get that, the real kind of even keel, right? That even playing field when it comes to appraisals. So, Mitch, what would you say are maybe two
Correct.
of the more common misunderstandings that you see around appraisals?
Well, one is many times the appraisal comes in right at the purchase price, right? And so, like, out of all these numbers that they're adjusting, how does it come in to like $451,950? And that's what the appraisal comes back at.
Yep.
So that's the one that I still question that out over these many years that I've been doing home loan. Buyer would say, how did they come to the exact purchase price? So the first thing I say is the good and the bad is the appraiser does see the contract. And really the reason why they're supposed to be seeing it is to see if there's anything else being included in the purchase of the home. Not necessarily the price that they're going for, but they're going for things like, is there a lot of furniture involved in this purchase or any personal items? Are there any seller concessions where the seller's paying closing costs? Or I still see, even though we can't use them, they call them carpet allowances, which isn't really a thing anymore, but still utilized. Sellers giving to the buyer to help sell their home and make it maybe more desirable for a buyer. And that's influential on the final price of the home. So that's the reason why they see it. But of course, they see the price.
Well, and
So
I would
get
add
that
to
question
that
quite a
too,
bit.
right, Mitch? That the value of something is only worth what somebody's willing to pay for it, and without the contract, they're not looking at what somebody's willing to pay for that piece. So, in addition to, I had that question come up today as an appraisal came back for a buyer. She said, "Hey, what a coincidence! Came in right at the contract price." And I said, "Well, yeah, that's happening frequently, and that number,
Right.
that contract price, is one of the numbers that influences their decision."
I agree, and it is what it is. It has to be done that way for the moment. However, you and I could probably think of many different ways they could come to a conclusion of value without seeing the contract initially, and then see the contract afterwards to see if there's any other kind of concessions involved. That's how I would do it. But
I think it's a lot of different ways that it could be sliced
so
up.
that's the first two. The other one would be, go ahead and finish, Matt.
Yeah, so a lot of different ways that could be sliced up. I think as we look at the different ways the appraisals could be done. Again, it's taking a lot of data and what's relevant and what do we weigh heavier. Those all matter. So
They do matter for sure. Be a good conversation to have with your father-in-law at another time.
Right. So what was that second one?
'Cause I'd like to hear how he sees that. The second one is actually around property inspection waivers. So not doing an appraisal and the comfort level around that. So the buyer would say to me, well, why would I not do an appraisal? Wouldn't that mean that I don't really know the value of the home truly, because that's what the appraisal does? And so it's a really valid question and point. And my conversation is, for sure, you can do an appraisal if you want to. There's no requirement saying you don't have to, even though you have the opportunity to not do one. But what I know is that Fannie Mae and Freddie Mac are pretty conservative entities, and they're not going to issue those waivers without feeling that the data will support what the valuation has been input from the contract.
Mm-hmm.
And so I say there's a lot of homes that we don't get waivers on because the value is not supported. And it doesn't really matter if someone puts 50% for a down payment or 60% or 20%. It's really, is it finding that property specific address in their database to be able to then compare it to other properties in the neighborhood? Can't do that, is not going to issue an appraisal waiver. So when it does find it, it has the ability to really do an in-depth analysis through artificial intelligence and information that's in there, and then come back and say, we feel the value is here. Let's save some money for you as the buyer. And that's really what their intention was around that, was to say, you don't always need an appraisal.
Yeah. You know,
So,
it's an interesting dynamic when we look at values of homes. Now, in a previous life, I sold motorcycles, and well, the book value was kind of there, right? I mean, you knew if it was a 2015 Harley Davidson Fat Boy,
right,
you just pull that up in the book and say, okay, it's worth X. Here's what it is. Not as many variations,
right,
right? Now, Harley made a lot more of those, than we're seeing homes, and homes are very unique. They're very diverse in location and the amenities and some other components there. So a lot more
right,
goes into the things that impact value than, if I just had this Harley Davidson in my garage, it's worth
right.
X amount.
Correct. Very much so. I mean, it's a 45-page document. The crux of the appraisal is probably about 6 or 7 pages. That is typically a very in-depth analysis of why the value is even there to begin with, and then how does that match up other properties that have sold within the last 6 months, within a 6-block radius, that is of like, so a similar type of home, which is sometimes very difficult to find also. A ranch is not a two-story, and a two-story is not a tri-level, and a condo is not a townhome. I mean, there's so many variables just in property type that has to be found in order to make it a as accurate as analysis as possible.
Yeah, without a doubt,
So
seemingly small things have a big impact on value, right? If
that's correct.
my house backs up to a railroad track, well, that's a little bit different than my neighbor who might be a quarter of a mile away, but they back up to open space. There's going to be a
Right.
dramatic difference in value, even though we might have the same floor plan, might have same beds, baths, right? Everything else might be very similar.
Right. And that's just desire. The next home buyer who wants to buy a home is what creates that value.
Yeah.
So, the noise of the train, and for some people, they may like that. And the peaceful serenity of the open space, some people might like that. So typically people don't like trains coming through their backyard, but that doesn't mean everybody doesn't like trains coming through their backyard.
My cousin who's deaf and chose a long time ago to stop wearing his cochlear implant. He's not going to be as concerned because he's not going to hear it. He'll feel the train rumble by, but that's going to be to the extent, right? So,
Right, right, exactly.
yeah,
Exactly. And we're using that as an example, but there's many examples. Some people don't want to buy a condominium that faces the pool because it's too loud and too many people might be hanging out there on the weekend. And some people go, I want to be able to walk right down to my pool and say, I got my own personal pool. I can walk right down to it.
yeah,
So, and that's more desirable. So it really is a very unique and individualized sense of, is this good, favorable or less favorable?
yeah.
So,
Yeah. So, and that kind of, sums up most of the questions that I had around the appraisals. Mitch, so as we wrap that up, is there any final kind of parting words around appraisals from a mortgage lender standpoint that you feel is important to convey?
well, I think appraisals have their place in the market. I think without them, we as lenders or the lending industry, i.e. banks and mortgage bankers, et cetera, wouldn't be able to do 3% down loans or no money down loans without an appraisal to help establish the value. So they play a crucial role in keeping things moving along in the industry and for financing. So it's really coming from that standpoint. It's not saying we want to oversee this whole process and run the whole thing, i.e. with one of them being an appraisal. It's how can we make this work so that it's fair for everybody all the way through that transaction, and that the lender, which would be Fannie Mae, isn't stuck holding a bag of properties that the values didn't hold. So I think it's a very good compromise on both sides when an appraisal is needed, when a lender is requiring it, and the benefits to both the buyer and the lender. It might even benefit them. They could say, I got an appraisal done and the house is worth 500, but I'm not putting it on the market for 475. And they would probably want to share that information. So there's many different uses of an appraisal, but that would be the most common one used from a new buyer getting a new home loan.
Yeah.
So
a lot of pieces to it. So now, Mitch, what are interest rates doing right now as of maybe today, this week, last 7 days, whatever? For those that are watching that are thinking about buying or they're thinking about refinancing.
Certainly. So when you're buying and refinancing, oftentimes there's two different thought processes around that. But for a home buyer, if you want to get into the market, mortgage rates are still at very close to historic lows. I call that pre-pandemic interest rates were about 3.25%. They're hovering right around there right now. They were a tad lower about 3 weeks ago, ever since the conversation about inflation not being transitory, that it's going to be here to stay expected, and all this backing up of all the goods and services. And right now, those things are causing interest rates to climb a little bit, but they're still extremely well positioned to help people be able to afford a home. So in buying, I say you get in the market as quickly as you can, because rates may go up and home values are still escalating. They're not slowing down. They're just escalating at a slower pace. As far as somebody refinancing, there's many different. Most people right now are calling me to refinance and to do some debt consolidation because they spent a lot of money on their home during the pandemic and currently to improve it, and now they've got this credit card debt that they want to now tuck into their mortgage to help expand and push that payment over a 30-year period to make it more affordable. And so we're seeing a lot of that right now because the rates where they are now, most people have refinanced or had refinanced while they were lower. So a lot of people aren't refinancing for lower rates, but to help with consolidation or buy a car, which is another challenge, of course. So the rates are still great. They're not 2.5% like they were a year and a few months ago.
Yeah. So
they're doing great.
It still makes sense to take advantage of that. Again,
Totally.
the rate, variations between, right, all depends on so many different factors, right? And that's why you're not going to hear Mitch say today the rate's at 3.125, right? Because far too many variables for that. But still, interest rates are good. It's a good time to take a look at refinancing. Connect with Mitch on the specifics, right? If you haven't already on that, you've got specific questions around buying. Mitch, I've got your information scrolling down on the bottom line here of our ticker.
Yep.
But yeah, so great. Any kind of final words just as a whole around this month in mortgages?
Yeah, I would say we're still in an arena of, if you can afford to buy a home, you should. You've got low rates. You've got a little bit more inventory in the market, and not as much. There's competition, but not as much as there was several months ago. So you're not competing against 15 or 16 offers. It might be 1 or 2 or 3. And how you present an offer from the mortgage and the loan standpoint could be a crucial step in a deciding factor of whether the selling side takes your offer or not. So keep that in mind. And that's one of the kind of the things I feel like my strengths are, is being able to communicate to the listing agent to help them understand what the offer really is and the benefit of accepting it comes in. So look to buy a home if it's comfortable, if you can afford it. I think prices are going to keep going up, and rates. So you might as well take advantage of both of those at lower levels right now, and look into it by contacting Matt to find out what's available to you and see where we can both help you position yourself to buy a home and create some great net worth in your life as far as financially goes.
Yeah, awesome. Well, Mitch, again, thank you for being a guest and coming with some great knowledge as we peel back the layers that is mortgage in our real estate market. So again, I want to thank you and looking forward to next month's conversation. So as you're watching, right, if you've got questions specifically around mortgages, reach out, shoot me an email, shoot me a text, let me know. We'll get Mitch to cover the specifics. So awesome, Mitch. Again, thank you so much.
Thank you. It's good to be here. Good to see you again. And we'll talk soon.
All right. Sounds good.
All right.
Take care.
Take care. Bye.
Bye.